Hello and welcome back to Mindfully Trading. In this video, I'm going to share with you a walkthrough of my trading routine. This is specifically for day trading the Forex market. Now, don't get me wrong, I do not sit at my computer and intricately day trade the Forex market all hours of the day, every day, 5 days a week. That's just not my style, and if that's what you're looking for, this is not the video for you. I have a very busy lifestyle. I am a full-time mother of 2 and I'm currently pregnant, which, trust me, equates to a very full-time job. But I still manage to day trade Forex profitably around that, making a nice income. So if you want an insight into my day trading routine, how I manage to fit in trading to a very busy lifestyle and how you can apply it to your own lifestyle if you are busy as well, maybe you have a full-time job, then this is the video for you. Please remember to like and subscribe to the channel. All of the software that I will be using is linked in the description below. Let's get straight to it. Before we go through each step of my trading routine, I'm just hopping into my broker here in MetaTrader 5. This is the account that I trade with the prop from the 5%ers, the high stakes program, and I'm doing this simply to show you in the history the trade that I'm going to be using as our example today. Now, I say example, this was a trade that I took in the live markets this week. So I've not handpicked some beautiful trade to show you that anyone can do. This is an actual trade I took. You can see the data right here at the bottom of the screen. It was taken on the 6th of October, and I'm going to talk you through my exact process on how I took this trade, starting with step number 1. Step number 1, I carry this out when the markets are closed, and that is my top-down analysis. Now, I am focusing on analysing the technical charts for the higher time frames, and I choose to focus on just one asset class, and that is the Great British Pound against US dollar. Just my personal approach to day trading Forex. I find that keeping it simple, focusing on one, helps to improve my profitability, and of course, because I am super busy, if you are busy, you will understand, it makes it so much easier to just follow one market. Step number 1 involves going through top-down analysis. I carry this out during a time when the market is closed, so it makes it really easy to fit into a busy schedule. For me, this is usually carried out at the weekends, but of course it can just be any time over the weekend when the markets are closed, because it removes the temptation to trade in the live market and you are carrying out the step purely to prepare for the week ahead. So this really helps you to enter the markets fresh at the start of the week, knowing what your bias is going to be. And I carry this out in a few different segments. So first of all, for top-down analysis, I start on the weekly time frame. Now this displays the week that we have just finished, the week commencing the 6th of October, but I am using this to demonstrate how I took the trade on the 6th of October. So I'm going to remove the previous week's candlestick. Because the week before, this is what I saw before I took my trade. I saw that the markets has closed up green, but with this slight wick rejection. That's all I look for on the weekly, is to see how the market performed the prior week. This tells me that we have been bearish because we had 2 bearish candlesticks before, and then the previous week has been a week of pullback. We've had a green candlestick pushing up, but the large wick rejection is rejecting the high, so it's not a strong bullish candlestick. Once I have determined that, I drop to the daily time frame, and I like to focus on the most recent price action. Now, overall, pound dollar has been in this sort of choppy sideways period for the majority of this year. It's always good to get an idea of the macro perspective, which is the larger perspective, which for this has been coming up, but from the summer period, we've basically been ranging. We've not been breaking these lows here, reversing, but we've not been continuing this uptrend. So we don't know whether long-term price is going to go up or down, which makes it even more important to focus on the very recent price action for the daily time frame. So I like to zoom this right in on the candlesticks, and I'll just use my arrow tool to demonstrate from the high here that price came down. We got a pullback up here. We made another low, and then the prior week we were pulling back. That's that small bullish candlestick on the weekly, but we have this wick rejection. We didn't break this previous daily structure here, which is the lower high, and we got this large wick rejection. We had another bearish candlestick down, but then on the Friday we closed with a bullish candlestick up. Until we break this level here, this key structural point on the daily, this is still looking quite weak, but it looks like price is trying to build something. So at the moment, it is very unsure which way we're going to go, whether we're going to go up or down. Now, that sounds like a very vague analysis, a very vague interpretation, but sometimes that is all we can do when we analyze. It's not always clear whether the price is going up or down, which makes our jobs as traders more difficult. But sometimes going into the markets when it opens, knowing that you're not sure whether the price is going up or down, is actually an advantage because it shows you that you need to be more conservative, you need to be more discerning, you need to look for stronger signs before you get in. If this was in a very clear downtrend and it's obvious the price is going down, then I may be feeling more risky when the market opens. I might open a larger position size or look for less confirmation to get into a trade. In this situation, this just showed me that as the week started, I needed to be a little bit more discerning. Step number 2. And this step can also be carried out when the markets are closed. I tend to carry out step number 2 after step number 1 as part of my preparation for the week ready to day trade. And that is to check out the upcoming news events that are scheduled for the week. To do this, I like to hop onto forexfactory.com. If you've not used it before, forexfactory.com is a brilliant resource. It is free. I'm not just trying to get you to sign up to something. It's just really useful because it's so important to know when the news events are due out so that you know what can impact the market movements and affect us as day traders. Forexfactory.com, navigate to the calendar button at the top, and you can click on this button here, this green icon, to filter it. So I filter it on the high impact, which is the red and the orange boxes here. I only want to know what could really affect the market movements. And you can also filter the different currencies. So I tend to filter it to just show me the news that's due out for pound, euro, and dollar. And this shows a calendar of the news events that are due out for the week. So this is what I could see a week ago before I took my trades. Why do I do this? Because I like to note when I should avoid the markets, when I should wait. There are different ways of trading the news. Some people like to sit at the screen as the news is being released and trade that immediate volume. I'm not really one of those traders. I prefer to wait until news has been released, and I wait until the dust has settled, and then I look to see if any of those movements match up with my technical analysis to help confirm in a trade. Now, this calendar actually looks different from the calendar that I had last week. Fortunately, I got a screenshot a week ago that I shared on my social media channels. Do follow me if you are on Facebook or Instagram. And I always share the calendar because it's so important to see what news is due out. This was what I saw last week. And the reason this looks different is on the Friday, you can see that we have NFP due out. So at the start of the week, I was prepared for NFP news release. Now, this has been a very strange situation at the moment. Let me know if you have experienced the same thing in the comments below. Usually NFP is released on the first Friday of a new month, so it's already late. And it's been postponed because the US government is experiencing shutdown. Now, I'm not going to lie to you, I don't exactly understand what that entails. It's not really relevant to me as a trader. I have still profited and made money this week without needing to really understand the nitty-gritty of what that entails. But what it means for me is that it is playing with the calendar and it is playing with my trading routine. But it is still possible to profit from these unpredictable events. Why am I telling you this? Because when I entered the markets at the beginning of the week, I was prepared for NFP on Friday, which means that for me, Thursday and Friday tend to be days I avoid due to that choppiness that can come with the anticipation of NFP news release. It happens once a month and it's a big news release for the US dollar non-farm payroll. When I carried out my news analysis, the start of the week, I decided that I would focus on trying to get my target hit early on in the week. From Wednesday onwards, I wouldn't trade. As simple as that. I also decided that I would keep an eye out for these key events. So looking on the Monday, although we had major news due out for the pound in the evening, I could still trade during the day on the Monday. Tuesday, there wasn't any major events scheduled, so that was another trading day possibility. And Wednesday, we had FOMC meeting minutes due out in the evening. Combined with NFP made me more skeptical to trade Wednesday. Step number 3, and this is what structures my day for day trading, if you like. Number 1, I wait until an alert is hit. For example, when I carried out my weekend analysis, if I had set an alert just above this key level here, so that when price crosses that level, an alert is triggered on my mobile app telling me so, I may open the chart and look for a possible trade. That would be one route to trading, and obviously that can happen no matter what time of day. But I would only do that if there wasn't any high impact news due out that day. So if that alert went off at 10 o'clock in the morning, but there was no news due out, I would look for a trade. Step number 2, if my alert didn't go off, I would wait for the New York session open, which for here in the UK is 1:30 in the afternoon. That is the session time that I usually prefer to trade, the New York session, because we've had most of the day's trading data to analyze, where later in the day I find that the moves can be a little bit more predictable and it gives me an edge on the markets. Step number 4, and this takes a little bit longer, and that is to analyze intraday market structure. We'll do that together now on the 15-minute time frame. This may be easier to do on the computer. Personally, because I'm super busy, I even do this on my mobile phone on the go, quite often in the car while my little one is asleep. And to make it easier, I like to add an indicator. This indicator is called previous daily high and low. The blue line at the top shows the previous daily high, and the dark blue line at the bottom shows the previous daily low. These are the key daily levels that I tend to trade around if we get a break above or below with a close. But right now it is just before the New York session open, and that's when I would tend to go on. If my alert hasn't been triggered, I would go on to the charts before the session starts, just to see what's happened and carry out some market structure. So I'm going to zoom out a little bit here. We know from the daily that we had that push up, that price was looking uncertain, that we were looking to break this key level up here, but we haven't got a confirmation for a move lower. So we're in the sideways consolidation. It's not always the best market condition for trading. But what I noticed here, looking at price action, is we had this sharp push down. We had this nice little consolidation here, which got broken with some momentum to the upside here. Now this makes what I would call a V pattern, because price kind of trades sideways a bit on the Friday, we trend upwards. And then what was interesting was on the current day, on the Monday, we opened with this huge gap down. Can you see where we've got this gap in the markets? From here to here. Now ordinarily, I would see that huge gap down and think, price is weak, we're going down. But we've already had the gap down, and during the London session we pushed up, we got this huge bearish candlestick down, but nothing. It just fell flat. There was no volume to take it further down. We broke the previous daily low, but price just continued to go sideways. It wasn't going anywhere. It was like the market wanted to go down, but people just weren't interested and they weren't there going short. So straight away, I was quite skeptical and thought that this might be making a double bottom pattern where we would get a turn to the upside to retest this gap. Usually when you experience a gap in the markets like this, there'll be a lot of orders sitting there. There's a lot of liquidity that institutions like to target because it creates movement in the market. But I wanted some confirmation for this idea of a long, especially because it went against my usual strategy, which is a break and close of the key daily levels, which in this case would be a short. What I was really interested in was this little pressure cooker we had over here. This is a key demand level because we have created this consolidation, broken below, pushed up with strong momentum, and we have currently come back to this, and we're getting a lot of wick rejections at this level, which means there are orders sitting there to push price higher. Once I saw this, I decided to set a trade plan. Now, I think I may have skipped the next step, which was to check the key daily levels. It kind of incorporates in with market structure. It's part of my technical analysis process. So I'm going to skip to the following step, my final step, which is, of course, setting the trade. Now, I actually set two orders for this. I set one order at 1.3425, just as the New York session was opening. And what I was interested in is if we got some volume pushing up, I was going to add to my position sort of during this consolidation. Price opened and straight away we got this push up. And it kind of grinds higher, and then we get this large momentum candlestick coming in at 2:30, coincides with when the stock market opens. It can bring some volume in then as well. And I'm just checking back to my order to see when I got out, because this is nearly a week ago now. I can't quite remember. One got out at 80 and the other at 50. I just checked back with my broker. I actually used a 15 pip stop for this trade. So my stop was quite tight. It was set just below this demand level here. And for the first trade, I actually had a 1.5R target here. And the second trade, I was targeting the move up to 80, which worked out at just over 3R. I did that because I wanted to target just past this gap. I felt like there was a very high chance that price would blast through this gap because so many people would be looking to short the gap, which would just trigger their buy stops and push price higher. And we would be aiming to just retest these levels up here. So that's why I set my targets up there. And the first target was because I like to lock in profit along the way. So I used 2 half-size positions, which in total gave me a combined profit of 4.5R. I usually risk 1% per trade, so that's 4.5% profits, which I thought was a pretty good start to a Monday. I managed to do this all during the New York session. So this is when I got back from collecting my eldest from school, because he does half a day on Monday. And whilst the boys were having their afternoon snacks, I managed to bag some profits. It's why I love day trading so much. It's so flexible, trading the Forex market. It's open all hours of the day, and quite often there will be a trading opportunity no matter how busy your lifestyle may be. And as you can see, that was the high of the move of the week. From then, price has just been having a really lovely trend lower. In fact, it would have been nice to capitalize on this, and there were a couple of pullbacks here that I really considered shorting, and obviously looking at this, I wish I did. But I kept with my original rule, which was the fact that I believed that NFP was going to come out and the markets could get choppy. We didn't see that, which is quite annoying. And I don't know what's going on with NFP still. I'm going to do some research this weekend. Maybe it will come out next week. We will see. Stick around if you want to have a little look at my dashboard of my prop firm account with the 5%ers. I'm just going to log in now. So here is the dashboard for my account. I'm currently enrolled in the high stakes $20,000 program. And I started this, it was a couple of weeks ago now, September the 22nd. And I've been having this really nice upwards curve with my equity. I don't think this is even updated. It says I'm up $300. I go back into my account, you can see here that I'm actually up $800 at the moment. Not quite sure why it's not updated on there. I don't go on this very often. I've just come on here for you guys mainly. But I'll keep an eye on that next week because I should be halfway towards that target. So my target is $1,600 and I'm currently up $800. So I'm halfway there. I don't have a time limit on this, so it's pretty chill. I can take my time, which really suits me, being a very busy mother of 2 with another on the way. But I've already hit the profitable days target, so all I need to do is make another $800 profit, and then I've passed phase 1. If you want some more information about the high stakes program, I did create another video comparing it with another of their programs, so I'll share a link to that above. And of course, there's more information in the link below in the description. Meanwhile, if you've enjoyed this video, do let me know by hitting that like button. Don't forget to subscribe to my channel so that I know to make more videos for you. Thank you for watching, and I'll catch you in the next one. Bye.